Ladies and gentlemen, esteemed judges and worthy opponents, good evening. It is with great pleasure and enthusiasm that I stand before you to advocate for the topic of Payment Vision 2025, which is an effective way, according to me, to grow our economy forward with respect to the digital transactions and to becoming a cashless economy as a whole. Before straightaway diving into the matter, let us acknowledge the fact that there is a monumental increase in the digital payments, and there is a lot of technological advancement in our economy, which in the recent past has surged in the unprecedented manner, specifically in digital payment systems witnessed across India. The proliferation of mobile wallets, various apps with respect to which provide UPI payments, and other convenience and efficiency apps which provide other digital online transactions have been very popular among not only in the urban areas of our country, but rural areas as well. So, according to me, the document which has been issued by the RBI with respect to Payment Vision 2025, it is not going to only regulate the whole digital transaction process, but it is also going to safeguard the interest of the people who are going to use the online payment system and reaching to the far-fetched areas of our country, like the rural areas. So, for example, the RBI has in 2023, the RBI had carried out basically to teach the rural people of villages. They had reached to 75 villages in the country to understand the technicalities of banking and other online payments through online apps and everything, so that even the rural, the people who are not as educated as compared to the people living in urban areas, they are also properly envisaged fact that there are the online payment structure is pretty safeguarded with respect to the regulations, and no one should frown upon it. Now, coming to the document itself, the Payment Vision 2025, the main objective of the document is providing e-payments for everyone, everywhere, and every time. These are the 4 E's which have been provided. Now, these 4 E's have been mated to the 5 I's, which is integrity, innovation, internationalization, institutionalization, and inclusion. Now, I would like to touch upon the inclusion in the integrity aspect of the document. Now, the integrity aspect of the document, the RBI has committed itself to setting up a system which is robust in the sense that it is going to set up an alternative authentication mechanism, which is going to be different from the regular OTP mechanism which we have been following for a very long time. Now, how is it going to be different? The alternative authentication mechanism is going to provide two-step authentication process. So rather than just getting an OTP on your registered mobile phone, you would have to go through a dual-step authentication process so that your online transactions are safe as compared to OTPs, because OTPs can be a culprit of online fraud. Now, coming to inclusion aspect, the RBI's initiative to promote financial inclusion, accessibility, and equity are truly commendable. By enabling geotagging of digital payment infrastructure, revisiting guidelines for prepaid payment instruments, which is PPIs, and extending customer outreach activities, the RBI is not only fostering the growth of the digital payments, but also ensuring that every individual, irrespective of their background, has equitable access to financial services. Furthermore, coming to the innovation aspect of the document, it envisages the facilitating regulatory sandbox. So, regulatory sandbox is a new concept wherein the regulatory mechanisms like the SEBI and RBI, before introducing any program officially introducing any program, they would be testing the program within a set of people who are agreeing to be tested through the program. So, in the form of beta testing, so that once the program is officially introduced in the market, it would be necessary. There would be necessary amendments with respect to the implementation, so that there is effectiveness and efficiency with respect to that. Also, the RBI is going to further explore on the guidelines on buy now and pay later, which is BNPL services, which further demonstrates the proactive stance, embracing innovation while protecting data security and regulatory compliances. Now coming to the fourth anchor, which is institutionalization. This is another critical anchor of the vision, which underscores the importance of a robust regulatory framework and international engagement. The RBI's initiative to review legislative aspects, constitute a payments advisory council, and active engagement in international fora highlighted its commitment to fostering a resilient and globally aligned payments infrastructure. For example, the RBI aims to comprehensively review the payment and settlement act in order to ensure that the regulatory framework is properly equipped with the dynamic environment we are living in. Now coming to the last anchor of the document, which is the internationalization anchor. It aims to elevate India's position on a global scale. They want to include INR in CLS, which is a continuous linked settlement. It is a system which is used as international payment system that enables that settles foreign exchange mechanisms simultaneously. Now, they also want to streamline RTGS to international standards. RTGS stands for real-time cross settlement. As we delve into the merits of this vision, let us first acknowledge the remarkable strides achieved under the previous payments vision 2019 to 2020. This payment vision was introduced in the year 2019, which shows that not only the payment vision 2025 is going to be promising, but it is also going to be collaborated with the 2019 payment vision. So, firstly, in the realm of financial inclusion, there was a surge in the Jan Dhan accounts system, which was introduced in the year 2019 during pandemic. So initially there were only 35% of the people of our country population were a part of this Jan Dhan account. However, after this payment vision was introduced, 45 crore people had opened an account in the Jan Dhan account. So what Jan Dhan account really does is it is a zero balance savings account that provide access to basic banking services. This usually caters to the rural area where the income bracket is not at par with the urban area. That is the reason why it has been given this lower benchmark. So coming to this shows that the implementation, which the payment vision 2019 was implemented properly, which shows that the 2025 payment vision is also going to be implemented properly. It shows that the 2019 payment vision is going to be in collaborate. It is going to collaborate with the payment vision, which is going to be introduced in 2025. Further strengthening the regulatory mechanism all around the online transaction and fraud-related aspects of the online transactions. Now coming to the conclusion, I would like to say that though the digital divide still remains a challenge, however, the vision isn't about abandoning cash. It is about offering choices and bridging the gap with infrastructure development and financial literacy. In conclusion, I would like to state that as proponents of this motion, I assert that the transaction towards a seamless cashless economy with a vision outlined by the RBI holds immense promise for India's economic growth and financial institution. By harnessing the transformative power of the technology, we can unlock new avenues for economic empowerment and mitigate the risks posed by traditional cash-based transactions. Thank you.
Very good evening, Honorable Chief, my fellow competitors and worthy audience. Today, I am Ayushi Jain and will be speaking against the motion with my debate divided into two segments. Firstly, whether there are enough safety measures in the legislation for digital payment, and secondly, if it is a positive goal. Starting with my first segment, I firmly believe that while e-payments offers convenience, however, India's rush towards this vision without comprehensive safety measures possess significant risks that cannot be ignored. As they are saying, that devil lies in the details, and it is the details that are concerning. Firstly, the use of digital payments has increased tremendously. But while it has increased, not everyone who is using it has the awareness about the danger it possesses. It's not like a cash, wherein a person giving a cash to another person and receives a bill. And if anything happens, then you can hold the other person accountable. It is in the digital transaction, the other person is unknown and not trustworthy. It is so in any digital transaction, there is a two phase that is present. In first phase, an amount withdraws from the consumer's bank account, and in the second phase, it goes and lands to a receiver's account. Now, we have used all the technology in the first phase, but India still lacks to protect the consumers when they lose money in the second phase. That is, when the money transfers to a receiver's account. This is where the confidence level of criminals goes up when they realize that no one is coming behind that. The 2025 vision might have warranted an increase in e-payments more securely and safely, but the measures to ensure the safety measures for digital payments are still outside the ambit of Information Technology Act and any other legislation. I would like to ask you all a very serious question. Do we actually have dedicated law pertaining to digital payments in India? Today, transactions between me and any mobile wallet service provider is merely a contractual agreement that can be repudiated at any time. Although IDF provides a legal framework for cybersecurity and lays out the punishments for unauthorized access and computer-related offenses. However, the IT Act was framed in 2000, and before social media and internet, it does not even have the word internet in it. Therefore, merely amending the existing laws or the existing laws would not suffice. There are certain lacuna which are inherent to the very nature of the crime that exists, which involves information technology, like cybercrimes, hate speech, anonymity in cyberspace, the issue of jurisdiction, the question of evidence, and most importantly, the issue of non-reporting, with the intention that it might hamper the reputation of the businesses that handles online. While the Payment and Settlement System Act 2007 has been enacted with the intention to regulate payment system in India, it mainly deals with regulatory oversight, and there still remains a lacuna which for dealing with consumer protection, promotion of competition, and innovation due to certain existing gaps. Furthermore, the Digital Personal Data Protection Act 2023, which has not yet come into force, collects, stores, and use the personal data by any companies which involved in digital payment. However, data breaches, phishing attempts, and identity theft continue to be a problem for digital payment. Therefore, looking at certain legislation, a dedicated law is required to protect the parties involving in transaction of e-payments. Now, coming to the second segment, that is, if 2025 vision is actually a positive goal or not. It is safe to say that cash has always been in transaction, and currently it is the most preferred transaction. For decades, India has been a cash-based economy. Despite the government efforts to shift from physical currency to digital currency, people still believe in cash. In fact, RBI's annual report revealed a little known phenomenon called cash paradox. It happens when the demand for cash, as measured by the value of currency in circulation over GDP, has either remained same or increased. And it is pertinent to note that in year 2022, as per the RBI's annual report, the cash paradox, that is cash in circulation, has been increasing from last 10 to 15 years. That means the amount of physical currency in circulation in India is relatively high. Now, I would like to quote and unquote the statement by the present Finance Minister of India, Srimati Nirmala Sitharaman ji, in Lok Sabha, which is in March 2014, the currency notes in circulation were 13 lakh crores, and in March 2022, it increased to 31.33 lakh crores. Even after the demonetization of high-value currency notes, cash still remains to be preferred mode of payment because of the following reasons. Firstly, consumers are reluctant to use digital payments due to lack of technological literacy and the significant risk of cybersecurity. Secondly, lack of infrastructure, especially in rural areas where they do not have access to computers and internet access, which is a big issue as e-payments are not possible without internet. As it is said that old habits die hard, cash remains dominant in India because it is more familiar and convenient. People use it for a very long time and feel secure about it. They think that everything is in their control and do not want to change their existing system of transaction. Also, I believe that there is a lack of trust in the system. We often use cash to pay to our maids, groceries, to pay to our domestic helps, and even buying property as well. The research by RBI economists note that cash serves as the de facto foundation for all types of payment. Lastly, I would like to conclude by saying that cash continues to play a very important role and should remain in the system. People continue to hold cash given the growing uncertainty in economic and financial conditions. Cash gives people the comfort of holding on to an asset that is highly liquid and used readily. Therefore, cash still remains the king in India. Thank you.